Hello, coming to you live from a hotel room in Denver, Colorado. It is Zach Seward reporting for The Hash. We're here covering ETH Denver. We're going to be on the site tomorrow with The Hash. It's going to be fun. But anyway, I just wanted to situate y'all with what's going on right now. All right, it's The Hash. We talk about crypto news. I'm Zach. We got Naomi, we got Will, and we got Jen. She's going to lead us off today. Jen, please take it away.
We are going to the metaverse. All right. So the New York Stock Exchange filed a trademark for its own NFT marketplace. The patent is for an online marketplace that includes digital goods, NFTs, crypto, digital media, and art, and also has a provision for virtual stores and showrooms. So you'll remember last year, the stock exchange minted NFTs associated with 6 tech stocks and didn't put them up for sale. They said it was just to commemorate these stocks. And so maybe we're going to see these NFTs for auction on this marketplace that has no launch date yet. So I'm going to pass this one off to Will. Will, what did you make of this patent filing?
Just first off, I'm bummed Zach didn't come over. I mean, got room. You can come sit over here.
I know.
Hang with Babu. I could just cuddle with Babu in the background.
Super cute. Did you invite him?
Over here, just lying on the ground doing nothing. He'd love to say hi. But
it's okay.
Tomorrow we got some special stuff planned. But this story was pretty interesting, and I believe CoinDesk got to it first. That might be fake news, but I think you guys got to it first. So props for that. Story itself is just interesting looking at the players in the landscape, right? OpenSea is basically a name that most people know by now, even just like crypto normies or people who are just getting into the space. They know about OpenSea, and maybe they even know about some of the more rare ones like Rarible. There's a lot of NFT marketplaces out there, obviously. But New York Stock Exchange is, it's the stalwart within the whole exchange ecosystem. And the fact that they're going into NFTs or might have some sort of NFT scheme at the very least, that's pretty fascinating. I mean, I don't know where this goes in the next 5-10 years. Like, I don't think that's even the question at this point. In fact, I think that's an unfair question because the NFTs they've been around for about a year. Obviously, NFTs have existed for about a decade now, but they've only been like a thing for about a year now. So it's unfair to ask questions about where this goes going forward. But I do think it shows you how interested corporations are in being involved with the times, keeping up with the Joneses, so to speak. And we're seeing the same sort of application here. Zach, I want to throw this one up to you. I didn't see if anyone's hands popped on this. But to me, this is like very much like the branded .eth things we saw with like Budweiser or Pepsi. But here it's New York Stock Exchange. Somehow it's like less cringy. I don't know why.
It's very interesting to watch. And I mean, that's the thing about Web3 composability, right? With a little bit of desire and some tech wherewithal, even the New York Stock Exchange can spin up an NFT marketplace. And that to me is really quite wild. But speaks to the moment, speaks to the open source technology on which this stuff is built. And will be really interesting to see if this captures sort of attention in the market, right? If the New York Stock Exchange becomes a venue for selling NFTs in some subset of the NFT trading community, then that's going to be really wild to see. It's going to also be interesting to see who follows suit and tries to make a marketplace of their own rather than just doing one-off NFTs here and there. So interesting signal, but speaks to the Web3 composability stack. So I'll toss it to Jen.
Yeah, there are so many, well, I guess we're still early, but I want to say there are so many competitors in this space, right? And it's interesting to me that they wouldn't look to create a partnership if they were going to launch an NFT or enter the metaverse and they're looking at their own NFT marketplace. And I don't know if anyone has an answer for me here, but my understanding of filing a trademark or a patent was if you had something original. And there are so many offerings out there that, have NFTs, have their own token. And so what does this actually mean? Like, what does it mean that they're filing this trademark? Can anyone answer that question for me?
I mean, my guess would be that a trademark is different from a patent in that, if they're filing a trademark, they're literally just saying, well, we plan to set up the New York Stock Exchange NFT store. And so they're just licensing that. And so I haven't looked into the application itself, so I don't know what it says, but that will be my presumption about this because I don't think they're doing anything novel. But there could be something novel in this. I mean, up until now, we've had NFT marketplaces that are focused on art, but keep in mind what an NFT is, just because it's now associated with the art world. It's a non-fungible token. It is something that represents ownership of something else. What does the New York Stock Exchange do? Well, they deal with stocks. So what if you could represent these stocks with a token of ownership, and then you could trade these back and forth? So maybe they're going into that sort of realm. I think Watchdog Capital does something similar to that, but there are lots of companies that kind of explore this like synthetic stock option where you have this token that represents this other thing. I wonder if that's what they're gearing up for, because I saw New York Stock Exchange getting involved with NFTs. My immediate thought was, this is a complete non sequitur. I don't understand why they're getting involved. It was very strange. Also because, they're the biggest stock exchange in the world, and generally there's a lot of like bureaucracy and slow moving. So the fact that they kind of jumped onto blockchain technology early was interesting to me. But then there was just this non sequitur of why are they getting involved with the art world? But then you got to take a step back and be like, well, that's the first application of NFTs that we've seen, the one that's kind of galvanized people's involvement. But that's not what an NFT is. An NFT is this digital, key that fits into some digital lock somewhere. It's something that represents ownership of this digital artifact. And so there are so many applications of that haven't been explored. I'll be interested to see if New York Stock Exchange is actually going to be novel in their exploration of that. But let's move on to the next topic.
All right, 'tis the season for metaverse explorations, and we're going to stay in the metaverse, and we're going to talk about JPMorgan, which is the biggest bank in the US. They've set up a little outpost in the metaverse, in this instance, the Decentraland metaverse. They built a little place to introduce clients and other Wall Street folks to what this whole metaverse thing can be and is at this moment in time. So interesting thing, we saw this with PwC, PricewaterhouseCoopers. They did a similar thing a few weeks ago where they built a little metaverse consultancy in, I think it was the Sandbox metaverse. But we see these trusted financial brands establishing a foothold in these new virtual spaces, looking to educate folks on what is going on. So this one was another interesting signal of a traditional financial firm doing something new and novel in Web3, and it was certainly pretty interesting to folks and generated a lot of conversation yesterday. So I'm going to throw this straight down to Will for his initial thoughts.
Yeah, I think you did a great job of recapping things. And so I'm just going to jump right to the bottom of this article. We see that JPMorgan has somehow found a way to model out what the price is and like the costs and spending in the metaverse the next few years. So they give an $18.41 billion value by 2027. That's going to be the amount of in-game ad spending in the metaverse. It's across like multiple different metaverses. And that modeling, as far as I can tell from the article, is based on the price jump of parcels of land, of virtual land within different metaverses this past year. So in the latter half of 2021, it went from about $6,000 to $12,000, 100% growth there, which is pretty substantial. To me, that almost just seems like completely like that's lunacy just to model that out and say there's going to be an $18 billion of in-game ad spending in 2027 based on something that is completely new. I don't know if I'm just alone there. Amy, I want to get your take on this.
Well, I think the average of prices of parcels of land is also a little bit of a strange metric to be using right now, because these metaverses all construct their worlds in different ways, right? Some of them are storing things centrally on a database. Some of them cost a huge amount, everything that you build in those worlds. Like, some of them are centrally stored, some of them are not. And so the cost can vary dramatically depending on whether every time you build something, it's going on chain or not. So it's not just the parcel of the land that needs to be factored in. It's the cost, like gas fees, whatever chain it's on, like how expensive is it to participate in this world? These are all giant factors that I think really complicates the world. And also, we're at such new stages. It's early stages of metaverse building. And so there are all we haven't got permissions figured out in there. We haven't got property rights figured out. Like, we're building entirely new digital societies. There's so much to figure out. And so they're using scant details to make predictions about costs and all of this, and they're really not going on much at the moment. But it's interesting that they're like, "Nah, it's enough for us to go on. Let's forge ahead." And interesting that JPMorgan. Okay, we got banks in the metaverse too.
A bank
that's
lounge.
Unpleasant. I thought it was going to be a fun place, guys. But maybe they could make banks a bit more unlike. But yeah, isn't the blockchain world to get away from these things? Anyway, I'm going to throw it to Jen.
I mean, it's funny you said, isn't the blockchain world to get away from these things? Because the metaverse is more and more starting to mirror our physical verse, and it just brings up so many questions to me. And one of them is when it comes to land. So when they talk about the price of land doubling last year, I think about physical land, right? That has value because there's scarcity. In the metaverse, we could potentially just have infinite land that pops up. And I know that there are strategic ways to make land not infinite in the metaverse, but it could be infinite and we don't know yet. And to Will, to your point, I would love to see the assumptions on that model. Like we predict that that these sales are going to be this much. And here are all of our assumptions that we've made. And
$18 billion industry based on 1 year.
Just before I pass it off to Zach. Go for it, Zach.
No, I think 18 billion is like maybe an understatement, because I was at an event over the weekend in Wyoming, and I think that there is this great angst among brands right now, big old brands, that they are unable to connect with new generations of consumers, and they see the metaverse as their best new opportunity to do so. So I would very much expect in the coming years for many big brands to spend many big dollars in these metaverse activations to do just that, right? To place bets on reaching a new generation of consumers who is increasingly wary of connecting with them on all the existing Web2 platforms that exist to date. So 18 billion in terms of companies spending money to reach folks seems reasonable to me, but I'll toss it to Naomi.
Yeah, I think on the scarcity point, it's interesting to kind of recalibrate the way we think of that, because it's not quite physical land that is scarce in this case, but it is a physical space. And we're looking at server space here. Where is your stuff going to be stored? And so obviously it costs money to store things in the digital realm. And so I think a lot of these costs kind of come from that sort of scarcity, although you can technically like infinitely increase the amount of server space in the world, there is a cost to that. And so there is like kind of this supply-demand trade-off that happens. It's not like, finite amount of space, but even with like physical land, you can build on top of things. You get air rights. You can build out, like it's not as scarce as perhaps we first think. But throw it to you, Will, for final thoughts and your final bearish outlook.
Just gotta say, I love these bankers coming in with these hot figures. I don't know where they pull them from, but there seems to just be no accountability. You can just publish whatever if you work at a bank, because you got the little stamp right there. JPMorgan said this, so it's okay. Let's go to break though, and up next we're talking about crypto VC investments in Latin America. But you'll have to stick around for that. A few more minutes. Sorry.
Hi, everyone, and welcome back to The Hash, where we're bringing you the latest and greatest in crypto and culture. We're going to be diving into the Marshall Islands, looking at what's going on there. Some really interesting moves where they are aiming to become a global hub for the incorporation of DAOs. So the Marshall Islands has just recognized decentralized autonomous organizations as legal entities, and they are becoming the first sovereign nation to do so. And basically, this new law grants DAOs the same privileges as LLCs and allows them corporate personhood and the ability to hold real estate. And it's just this very interesting world we're living in as we start to refactor our idea of what an organization is now that we can decentralize trust. So Marshall Islands, kudos to them for kind of always being at the forefront of this. They've tried this sovereign currency push years ago, still hasn't quite played out because of a huge amount of pushback from things like IMF that really didn't want them to explore their own sovereign currency on the blockchain. But they've really been early stages at exploring a lot of this technology. And I think it's going to pay off for them. I know a lot of people involved with these DAOs who are looking for places to incorporate. They do want to hold land. They do want to figure out how this can work in the physical world. So the fact that the Marshall Islands is becoming a place where that could be made easier for them to understand and navigate is exciting. But Will, I'll throw it to you for your thoughts.
Well, I actually have a lot of questions about this one because it seems to be that you're essentially able to have an LLC in the Marshall Islands based on this DAO, which I guess the question is like, how does that interact when you go internationally, right? If someone is purposely jurisdictioning their firm in Marshall Islands, how does that interact with companies like outside of the Marshall Islands? I know that Wyoming had something like this on the books, right, with the Avanti and a few other like DAO programs with like their blockchain laws that they rolled through. I'm not overly familiar with it, but I know Zach is, and maybe Naomi, you can answer that question as well. So I'll boot it to you first, making it Zach's thoughts after that.
Yeah, throw to Zach first, and I can chime in.
Yeah, I mean, I guess the idea here is that, yeah, if Delaware can do it, so too can, if Delaware for incorporating traditional companies can do it, so too can Wyoming for DAOs and Marshall Islands as well, half a world away. But I think the questions are very fair and apt, right? How these decentralized structures interact with sort of very traditional legal constructs when it comes to business incorporation is still a bit of an open question, right? Are these things DAOs in name only once they become registered as LLCs, or does the governance that is dictated on chain by signaling or other on-chain metrics, does that carry over into the court of law should there become any business disputes in the future? So it's going to be interesting to see again as this stuff gets figured out, but it's cool to see Marshall Islands again continuing to experiment, even though their sovereign cryptocurrency got batted down, apparently, according to some reporting in the CoinDesk piece. So, yeah, I'm going to toss it to Naomi, though, for her thoughts.
Yeah, I mean, it's interesting. Like, this isn't actually the first time that companies like DAOs have been looking to figure out how do we interact, how do we work like an LLC and all of this. I know that the Dash Investment Fund, the DIF, which is a DAO that basically wanted to be able to invest in products rather than just give grants to products. And so, then they get returns from if those products do well, et cetera. So I believe that they, as a DAO, registered in the Cayman Islands. So they're an entity that's actually not owned technically by anyone, which is kind of interesting. I know that Darren Tapp in the Dash community has spoken a lot about this, like how if you're a DAO, do you incorporate? And Cayman Islands apparently is an interesting place to do that. But now Marshall Islands has kind of made it official and said we want to be the hub for DAOs. We are, passing these laws and making this easier. So it'll be interesting to see if this becomes a more popular thing. I know that this CoinDesk piece talked about how international jurisdictions work. Like, if you're registered in the Cayman Islands, or the shipping industry is primarily all registered in the Marshall Islands. There are these different hubs that become a good place for certain industries. And so, yeah, it may just be a good place for decentralized autonomous organizations. But I'll throw it to you, Jen, for your thoughts.
Yeah, we spoke about regulators thwarting innovation in the States. And I think this is just an example of jurisdictions who make it easy for these new innovative companies that are working with new tech that, we really don't know what they're going to look like in the future, to give them that sandbox to play in so that we can really see how this evolves. And so I think this is an example of, areas making it a lot easier to operate than the US. And I think we're going to see more of this as regulators show that they either don't understand or they don't want companies like this operating under their purview. So this is just an example of what we were speaking about yesterday for me.
This is good for DAOs.
Yeah,
so let's move on. Who's next? Will.
We're
going to Latin America now.
Yeah. What's the 411, Will?
Let's leave these enchanted Marshall Islands of the South Pacific and stroll over to Latin America, where we're seeing a lot of investment money, 10x from 2020 in 2021. We're talking billions of dollars pouring into Latin American crypto projects, and then also VC in general. VC investments across the Latin American space were up tremendously. I don't have the numbers right in front of me. I could probably scroll to it, but just know it's a huge number, and it basically shows you that there is a large market for VC investments outside the United States. And I think that's mostly what we see in headlines, is that VC money from Silicon Valley is going into more Silicon Valley projects. But there's a huge world out there, and crypto projects themselves are a key place for those dollars to be found. because they're global by nature, right? Last week, I think we talked about India. Really, the last 3 weeks, we've talked about India a few times and how much money is going into that sector, how regulators are starting to understand cryptocurrency as an industry and regulate it in a more mature fashion. I think we're seeing the same thing in Latin America, where a lot of money is now following these projects. There's a lot of top exchanges in Latin America. Obviously, we've seen the El Salvador play, and we've also seen things like Venezuela start picking up Bitcoin and altcoins from the ground up, using it for day-to-day currency. Naomi, I want to throw this one up to you, though. I know that you've talked to a few guests on your channel about this, at least the Venezuela part of this story in the past. But what's your take on this headline?
I mean, it doesn't surprise me, but also I'm wondering how much these countries themselves are accepting it. You mentioned Venezuela. Venezuela is actually pretty restrictive when it comes to investment in these things. There have been lots of different products that have set up shop there to facilitate the incredible number of crypto transactions there. A lot of people using crypto there as a lifeline. But then a lot of things have been shut down because the government just doesn't want people to have opportunities and options outside of the petro, outside of the Venezuelan bolivar. And so it's really, it becomes a game of control in a lot of these countries. I hope that this investment really does encourage the countries to be a lot more open. Obviously, different Latin American countries are treating this very differently. Venezuela is one of the most restrictive in that, if you want to be part of a mining pool, it has to be like a government-run one. You have to register with the government. They get all the funds, and you potentially might get something distributed from the pool, but probably not. And so I definitely look to Latin America as being one of the most interesting places in the world when it comes to crypto right now. I think Latin America, Nigeria, hugely interesting because these are all places that are growing crypto out of necessity, not out of this is fun or interesting or this is like a political stance. These are people who are flocking to it because it literally is a lifeline, because it's an opportunity to safeguard their wealth or make ends meet, and they're otherwise precluded from doing so just within their traditional financial systems. So I'm definitely keeping an eye on a lot of these countries and seeing the innovation of what people really need to use. What's a necessity? How is crypto really valuable in places like this? Because that's why crypto was created, essentially. But I'll throw it to you, Zach, for your thoughts.
Yeah, I think that's spot on. I mean, the specter of hyperinflation looms large in South American history, and I think that's why you are actually seeing a lot of usage of stablecoins and other crypto assets in some of these countries. So it makes a ton of sense that the venture capital investment would also flow there to support some of these early signals of actual usage. I mean, if we zoom out a little bit, first of all, 2021 was just a bonkers year for crypto VC. According to some reports, like $25 billion was invested. So that 653 million of it went to Latin America seems totally plausible, maybe even surprisingly small, but it speaks to the wild growth of crypto VC activity in 2021 writ large. And again, that some of that money is going to Latin America, where there is, again, early signs of actual usage, to Naomi's point, makes a ton of sense. I think I saw Jen's hand, though, so I'm going to toss her away.
Yeah, Zach, Naomi, you kind of said what I was going to say. I was going to look at Argentina, where inflation is more than 50%. And I was reading up groceries for their family. And so I think you guys are absolutely right. As the consumer demand increases out of necessity, that we will see more money flow into these countries. And hopefully the government doesn't outregulate it, because I think we're seeing the people who need crypto and who need these solutions get the most there.
Just to follow up,
I'm going to wrap it, but you need to last thoughts from Will, and then we'll wrap this thing. But
I need to fact check myself, or at least elaborate on the numbers. So yeah, $653 million poured into South American VC projects last year, 10 times more than 2020. And then I think overall, let's see, there was $25.2 billion in VC spending in Latin America in general, up 713% from 2020. Was just $3.1 billion. So just like you said, Zach, a lot of VC money funding a lot of pockets this last year, and a ton of that dough was going to Latin America.
The man who loves his facts. Good job, man. Thanks for doing that. All right, we're going to leave the show there. That's it for the Hash today. Some of us are going to be in Denver this week. So take an eye out for that tomorrow and Friday from the Hash. Also, we always do this all about Bitcoin show. What about Ether? What about Ethereum? We're going to do all about ETH Thursday and Friday from ETH Denver. one of the biggest gatherings of Ethereum developers in North America and maybe even the world. So stick with us, check that out. It's going to be a special week full of news and other insights and interviews. Good times. I'm Zach. We got Will, Naomi, and Jen. We are The Hash. We will be back tomorrow. We'll get you up to speed on the latest in crypto and culture, and we are looking forward to doing so. All right. See you soon. Thanks so much. We'll talk to you later. Bye.
Bye.